Hello everyone. This video is all about a topic which is much discussed these days, the role of foreign institutional investors in Indian equity market, Indian stock market as such. Before getting into the intricacies of that, first let's understand who are foreign institutional investors. The foreign institutional investors FII is none other than institutions from foreign nations who are investing their money in the Indian stock market or Indian investments. Now let's split the timelines for understanding what is the importance of foreign institutional investors, and well, in that case, who all holds the stakes in various stocks in the Indian equity market. So we'll split it into three phases: 1992, 2015 and currently 2025. 1992, why the relevance of that is that FIIs were allowed to invest in Indian markets in September of 1992. So first entry by an FII named UBS was early September 14th of 1992. So that marked the start of investing by foreign institutional investors. So that's why I took 1992. Then 2015, why? Because that is when the holding by FII, foreign institutional investors, peaked to an all-time high of 20.2%. So going back to 1992, a company listed in stock market has got the following stakeholders as such. So first is promoters. Normally they have the highest percentage of holding. Sometimes companies like Infosys wherein the percentage is very low, but normally promoters has the highest holding. Then foreign institutional investors FII, domestic institutional investors DII as in mutual funds and other institutional investors which are inside India. Retail investors like us, we all are categorized under retail investors, the normal small volume investors. Then there is others category wherein it can have HNIs, high net worth investors, corporate bodies, NRIs, trusts, government and non-institutional entities. So in 1992 the promoter was having holding as high as 75%, because that's a time when the market was just flourishing. People didn't used to believe in stock market as such, and the doors were open for foreign institutional investors in 1992. So the promoter stakes were as such higher at that time. DII held 5%, FII held just 1% because start in 1992. Retail investors 10% and others 9%. If you see retail investors 10%, so that investments was mainly driven by PSU, investments and IPO in early 90s. As I told, promoter used to have larger chunk due to low institutional and foreign presence in Indian stock market. And DII, as you know, it was mainly our LIC, UTI, the General Insurance Company, GIC, etc., which were public institutions. And at that time, private mutual fund players were not there as such. Then coming to 2015, the promoter holding was at 50.8, fell from 75% because institutions started investing and believing in India growth story. DIIs held 10%, FIIs held a all-time high holding of 20.2%. Yes, in 1992 it was just 1% and in 2015 it was 20.2%. Retail investors and others holding almost 19%. Retail investors also had increased from 10 to 15% from early 1992 to 2015, and FII, DII, so everybody started investing more and promoters started to release their stake so that they can get capital either through IPO or other stake sale, so that they can use that money to invest more into their business and flourish the business. If you see, the all-time high of 20.2 reflects the strong global confidence in Indian equities. The promoter holding, as I told, fell due to regulatory push for minimum public shareholding and also capital raising by the companies. If you see, the retail investors like us remained significantly invested into small and mid caps, unlike large caps these days. Coming back to 2025, currently as I speak, promoter holding almost at same of 50.1%. DII rose to 17.62%. FII fell from 20.2% in way back in 2015 to just to 17.22% in 2025 as I speak. A few months back, in start of 2025, it was just around 16% because there was heavy FII selling due to various factors, and then DII supported the market and their stakes increased. In fact, their stake slightly increased above FII now also, because FII holding is 17.22% and DII is 17.62%, which is above FII holding for the first time in the history. Retail investors around 9.49%, 9.5%, and others around 5.17%. So that's the holding split. So FII has been an investor since 1992, starting from 1%, going to as high as 20.2% in 2015 and falling back to 17.2% around in 2025. But the only change here is that retail investors are going strong. They know about the Indian stock market and the India growth story. Also, domestic institutional investors, enforced through again retail investors through mutual funds and other SIPs, are getting huge cash inflow wherein they can support the market and participate in the India growth story. So DII, unlike the old times, has raised to such a level wherein they can compete with FII, and even if the market is sold off by FII, DII can support the market. And if you speak in index level, again, which doesn't make any sense, but still we have to speak in index level. So index level, Nifty, whatever. So it is being held by strong buying by domestic institutional investors, wherein FII sell also, the market is not falling because of that strong inflow. So now you know that the stock market, the stocks are held by promoters, DII, FII, retail investors, and other institutions. So now you know that even if FII sells, the market may not fall much, but yes, just like DII, FII also has got almost equal holding. So if they sell, if the DII is unable to buy, the market will definitely fall. And also there are a lot of discussions, trade talks by India to foreign nations wherein there is a huge FII inflow being expected. So that is one positive thing. And also India is in a good point, inflection point, wherein we are going to become a developed nation by 2050. So definitely the growth rate will be high. Our GDP also growing at 6 to 7%. So all these things will attract the FII flow and markets are supposed to go up. And also you should know that FII, you are hearing that FII is selling for 5,000 crore, 10,000 crore daily on a daily basis. In Money Control, you can get the FII DII data, sell data, net sell data. So they sell and buy every day. So the net data is what you look at, the sell or buy figure. You should know that FII sells means they are holding 17%, and if they are selling 1%, their 16% holding price will also go down and they will suffer huge losses even with that 1% selling. So it is a small profit booking they are doing on a temporary basis, but definitely as long as they hold more than 15%, they have huge stakes in Indian stock market and they will not sell as a whole and go. It's a kind of small profit booking or hedging they are doing in a temporary basis. So you should not be worried about FII selling, they are selling and going off or something like that. So my whole point here is that you don't have to worry about the FII selling and going out because of US trade war, and also the bond yields are increasing, so they are getting a safer haven there compared to developing nations like us. So their bond yields are higher, means they will park their money back to their nations, and once the bond yields fall, then they will come back and invest in our market. So that is very normal thing. Since 1992 we are seeing these fluctuations, but their holdings has been around this 15 to 17, maximum 20% only. So as far as we are strong, retail investors, DII and even promoters are buying back the stakes. So we don't have to worry as such about the Indian market as far as the FII selling is concerned. So hope this point is clear. See you in next video. Till then, happy investing.